Good morning, ladies and gentlemen. It's a happy Friday from this part of the world.
Ladies and gentlemen. Ladies and gentlemen.
Happy Friday to you all. So let's confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get the session started. So I would like to see some feedbacks in the comment section so we can get this started. So what do we have right here in the comment section? Okay, thank you, Abdallah. Good morning to you. Thank you very much. Okay, good morning, 5776. Good morning, Juleng. Maya Jamin, good morning to you. Thank you very much for that confirmations. 4333, salutations to you as well. All right, so I will be saying this as a positive feedback that we are good to go this morning. So I'm welcoming you to another promising session on the extreme speed. In fact, I'm very excited to call the session live today, as we are profitable in all of the pairs we have been monitoring since the beginning of this week. And as usual, I will be taking you on a trading journey. My name is Sharif Daramola, and for the next 1 hour we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And being the last trading day of the week, it's a Friday. As usual, what we do here is to review all the pairs we've been monitoring so far, and at the same time rounding off on most of the pairs that we have been monitoring. So the session today will be more of reviewing how well these pairs have been doing. So we are going to be looking at how the week has started on this one, and how we want to be securing our current position in anticipation of any possibilities that might likely be happening for us during the New York session today. And for those who are joining us for the first time, you are welcome on board, and I'm very glad to have you around. And if you are yet to understand how this works, what we simply do here is gather here every day in anticipation of the New York session. So what we simply do here is to prepare ourselves for trading opportunities that we would want to take advantage of during the New York session today. And I would also advise that you continue to stay tuned in, and with time you get to understand how this works, and you will be able to take your own personal decision on your own based on the information you are able to digest from this platform. So once again, thank you very much for coming around, and welcome once again. So with that being said, here we shall be diving right into the chart at this point in time to see what is really going on in this market. Well, for the economic calendar, we really do not have any major macroeconomic event to look forward to today. So we shall be diving right into the chart using our technical skills to map out market structures, using the structures to identify trading opportunities for today. So with that being said, here we shall be diving right into the chart, and the first commodity we are going to be looking at this morning is the US oil. And on the US oil, we have been quite profitable since yesterday. And let's quickly run through how the week started for us here on the US oil. Well, we had a situation at the beginning of the week where price action had a bearish gap. As you can see here, price closed last week's trading session around the $80 level. And when the week started here, we saw a situation where price started around the $79.50 level, leaving a huge bearish gap, which was a sign that a lot of trading activity did happen during the course of last week's weekend. Now we saw a situation here where price action was caught within a flat channel between the $79.50 level and the $79 area, and what we anticipated was a price should either break out of the channel or break down of the channel to give us an opportunity to trade. However, funny enough for us, on Monday, during the first couple of hours of the New York session, we saw a breakout retest of the $79.50 level, which gave us a beautiful opportunity to buy, and price action moved over 130 pips in our favor before we started seeing this bearish momentum that started later on that day. And in fact, we were not keen to join the bearish momentum, as we were thinking that because of the fact that price action broke out of the $79.50 level, we shall be looking out for more buying opportunities at the retest of structure. So we had an attempt here on Tuesday where we looked out for buying opportunity, but we were taken out of that position to further emphasize that sellers are likely going to be coming in this market. And this was followed by multiple rejection of the $79.50 level, giving us a clue of selling pressure around that area. And as a result of this, we saw the first breakdown of $79 level here, and this was a beautiful sign that sellers might likely take over this market. And during the early hours of Wednesday, we saw the breakdown retest of the $79 level, which gave us an opportunity to sell the US oil, and price action moved about 150 pips in our direction before we saw this bullish momentum happen. Now on Wednesday, we had another opportunity here where we saw buying opportunity. Price action broke above the $79 level. We saw some how many pips was that? I think around 50-80 pips thereabout before another wave of bearish momentum happened. And since then, we saw a situation where price was unable to break out of the $79.50 level, and at this point in time, it was a beautiful signal that sellers might likely be coming in at this point. And one thing I told you yesterday is that for a better and significant confirmation that sellers are very strong in this market, we want to see a breakdown of the $78 level, which has been a strong buying niche in this market since the beginning of this week. And that was exactly what we saw here during the early hours of today. Price action broke down the $78 level, and price has been trading to the downside from this area. And for those who are taking advantage of this move right here, well done to you for being on standby to catch this move, as you will currently be running with 100 pips in profit at this point. So well done once again to those who have been part of this trade. And at this point in time, the next thing we want to be doing right now is to secure the current position in order to protect ourselves against any sudden pullback that may happen from this point. So the most appropriate area to move our stop loss at this point, I will be suggesting that we move our stop loss to somewhere right below the $77.80 level. Let's give some room for price action to breathe, with the hopes that we will continue to see price action trending to the downside. So with this information we have here, and you've moved your stop loss accordingly, let's see if the market is going to be giving us more opportunity to add more position to our existing trade. And as we get prepared for the New York session today, I would like us to scale up into the daily time frame, where we want to be having an holistic view of what has really been going on this week, then see if the bearish momentum we are in right now is still going to be very valid as the week comes to a close. So in order to do this now, we want to be scaling up into the daily time frame. And if we scale up into the daily time frame, the first thing we saw here at the beginning of the week was to map out this bearish momentum that started 7 months ago, and as a result of that, we had this bearish trend line figured out after connecting this series of lower highs here. Now, if we zoom into what has been happening here in the last 3 to 4 months, another structure here that which caught our attention is the $80 level. And if you look at the structure here since the month of November, we saw how the $80 level has been a strong selling niche for participants in this market. Despite the fact that we had a strong demand zone around this area, we saw a situation that where price, as soon as price gets into the $80 level, we saw sellers rejecting or negating all attempt by the buyers to break out of that structure. The same thing also happened here in the month of December. I think the first week of December here also, we saw selling niche around this area, negating all attempt by the buyers to break out of that structure. And in fact, price action closed around the $80 level at the end of last year's trading session, and at the beginning of this year we saw another engulfing candle taking price out of that structure to further emphasize the strength of the sellers at this point. And the same thing continued to happen. In fact, it went a couple of weeks ago, we saw a situation where we saw a consolidation phase around here, which was characterized with more selling pressure, dropping price back into the $80 level. And during the course of last week's trading session, we saw a situation where price closed around the $80 level, and since the beginning of this week we have cited a situation where price has continued to trade below the $80 level to further emphasize the strength of the sellers at this particular point in time. And during the live session yesterday, we were able to identify the importance of the $78 level, which is right here. And one of the things that we took note of here is the fact that during the second week of the month of January, we saw a situation where price was caught within the channel between the $82.50 level, which was the resistance point of the channel, and the $78 area, which was the support level of that channel. And in fact, we saw the breakdown of the channel during the later part of the month of January stroke the early days of this month to give us a signal that sellers are still very strong in this market. Though we have a demand zone here around the $73.50 level, which has been negating all sellers' attempt, pushing price to the upside one more time, but we saw the rejection of the $80 level. And during the course of yesterday's trading session, we anticipated that we want to be seeing our price action will be reacting to the $78 level to decide if we are going to be buying or selling the US oil. And one thing we said we want to be looking out for buying opportunity is that if we start seeing buy pressure above the $78 level on our lower time frame, breakout retest to structure will be giving us an opportunity to buy the US oil. However, we mentioned that if price action does break down the $78 level, it will be a beautiful opportunity to join a trigger to the downside. And in fact, this is exactly what we saw here. And in the last 24 hours, we have seen a situation where price action has broken down the $78 level to further emphasize the strength of the sellers at this point. And like I told you on the 1 hour time frame, we have moved our stop loss accordingly to lock in some profit here as we continue to monitor price action. So for today now, what are we going to be planning to do? How do we intend to take advantage of more trading opportunity? Well, for those who had missed out on the breakdown of the $78 level, at this point in time we need to be very, very patient to see how price action will be reacting to this trend line. And what is that trend line here? If we look at the structure here since the first week of the month of December, we saw how price action has been finding bullish momentum since it tested the lowest point it had ever been in years, and that is the $70 level here. And one thing we saw here was that price action continued to find higher lows to further emphasize that there is some buy pressure around this area. So we saw the higher low here at the $73.50 level, and since then price is yet to break down this structure here. And if we connect the series of higher lows here, we were able to identify this bullish trend line, and as a result of this we can see that price is currently approaching that bullish trend line at this point. Hence we need to see how price action will be reacting to this trend line to determine what our next line of action will be. So if price action gets into that bullish trend line and we start seeing buy pressure around this area, we might likely be seeing another wave of bullish momentum. And if we go to as far back as the month of September here, you will see how this area around the bullish trend line had been a strong buying niche in the past. So we should not ignore the possibilities that buyers might likely take over this market if it approaches that bullish trend line that I just showed you earlier around the $77 or the $76.50 area. So we want to be taking into consideration how price action will be reacting to this level to determine what our next line of action will be. Now, if it so happens that price action breaks down the bullish trend line, then it might be a beautiful opportunity to add more position to our existing trade if we start seeing rejection of the trend line or reversal patterns below the trend line here to join another wave of bearish momentum to the downside. So these are the things we shall be looking forward to probably for today or next week on the US oil. So at this point in time, kindly move your stop loss accordingly, secure the current sell position we are in right now as we look forward to see how price action will be reacting to the 77 is it a 77 area? No, I think the $76.50 level area during the New York session today. So in that regard, we shall be scaling down into the 1 hour time frame, where I want us to be looking at how the $76.50 level is positioned on our lower time frame to determine how we want to be trading this. Now if we scale down to the 1 hour time frame, so right now I am on the 1 hour time frame, and what we simply want to do right now is to identify the $76.50 level here. And for the sake of this current structure here, I will be using the $76.60 area, which has a confluence with the current structure here. If you look at what we have here in the past, you can see how the $76.50 level had been a strong buying niche. We saw buy pressure from that area. The same thing also happened here during the second week of this month, and price action is currently approaching that structure. So for the sake of clarity, I will be labeling this structure here. So we have this label as the $76.60 level, 76 level around here. So what I'm saying, simply saying around this area, is that we need to see how price action will be reacting to this level to decide if we are going to be adding more position to our existing sell position here, or we're going to be planning to join another rally from this point. So what we want to be seeing here is if we start seeing buy pressure resume around this area again, we might likely see a situation where price will come back, do a retest of the $78 level or the trend line here to incite another wave, and if a breakout of the level happens, then we might likely be looking forward to another opportunity to join a bullish momentum. However, if price action breaks down the $76.60 level, then this will be a beautiful opportunity for us to add more position to our current sell position that is running right now. So this is what we shall be looking forward to on the US oil. Please and please, for those who are already in the sell position here, have the breakdown of the $78 level. Kindly move your stop loss accordingly, secure this current position, and let's wait out and see how price action will be reacting to the structure at the $76.60 level in order to decide what our next line of action will be. If you have any question regarding what I just explained so far, feel free to drop your enquiries in the comment section, and I will be checking the comment section from time to time to see if there are any questions for me. All right, so I will be moving on to the next option, and the next option we shall be looking at this morning is the US tech. And on the US tech also, we have a beautiful profitable situation running here on the US tech, as we have a sell momentum that was triggered at the breakdown retest of the 12,600 level during the New York session yesterday. But before we go into that details, let's quickly run through how the week has started for us on the US tech and how profitable we are at this point in the market. So at the beginning of the week, we saw a situation where we started seeing buying pressure resume around the 12,050 level here, and we had a little consolidation phase within the structure around the 12,320 and the 12,250 level. And as a result of this, we were able to identify that channel, and you know what we look out for whenever we identify such a flat channel is to see a breakout or breakdown of that channel to give us a signal for a trading opportunity. And in fact, what happened during the New York session on Monday was that we had the breakout retest of the 12,320 level to give us a confirmation to join a bullish momentum. And in fact, we had multiple entries on this one, as we had the first position running here. We had another position at the breakout of the 12,400 level, after which we saw a situation where price action was caught within a channel after testing the 12,520. So with the channel we had here between the 12,520 and the 12,470 level, we moved our stop loss accordingly, and we were actually taken out of both positions after witnessing this volatility that happened on Tuesday. And I think it was as a result of the consumer sentiment index which happened, and it took about 3 to 5 hours before price action came back into normalcy. And during the live session on Wednesday here, we saw the situation where price came back within the channel which we identified earlier between the 12,520 and the 12,470. And one thing we said is to look out for a breakout of the 12,520 to join a bullish momentum. And that was exactly what happened here, as price action moved about 230 pips in our favor before we started witnessing another wave of selling pressure. We had another position here above the 12,600 level at the breakout of that level, which also gave us about 150 pips. And on Thursday's live session, we were lucky enough to catch this channel here also between the 12,750 and the 12,685. And one thing I stated here on that Thursday was that there is a likelihood that price action might break down the 12,685 level, which might likely bring price action back into the bullish trend line, which has been guiding bullish momentum in the last couple of weeks, to incite another wave of bullish momentum. So if you are taking advantage of the breakdown of the 12,685 during the New York session yesterday, well done to you for being on standby to catch that move. Has that move moved about how many pips into that bullish trend line? 140 pips before we saw those bullish momentum started. And one thing about this structure is the fact that as soon as price broke down both the 12,600 and the bearish trend and the bullish trend line here, it was a sign that sellers might likely be coming in at this point. And you know that from a technical standpoint, whenever we have a breakdown of a structure like this, that is the 12,600 level, there is a likelihood that price action will come back, do a retest of structure to incite another wave of bearish momentum. And what we saw here was quite interesting during the later part of the New York session. As soon as price came within the 12,600 level, we started seeing selling pressure around that area, which anticipated a sell position right below the 12,600. And you have been part of this trade. Well done to you, as you will currently be running with over 250 pips in profit at this point. Now we had another position at the breakdown of the 12,400. Remember, I showed you this situation here that if price action breaks down to 12,400, we want to be looking forward to another opportunity to add more position. So for those who have been part of this trade since yesterday, well done to you guys for being on standby. to catch this move. And the next thing we want to be doing right now is to move our stop loss accordingly to secure this current position at this point. And if we look at the current position here and looking at the previous structure, we can see that we have the 12,400, which has been a strong buying niche in the past, which was later broken during the early hours of today, is more or less an area we should be looking to move our stop loss to give room for price action to breed. So if you are already still in this trade and you are not yet taken out of this trade, kindly move your stop loss to somewhere right above the 12,400 with the hopes that price action might likely do some retest of structure to incite another wave of bearish momentum. So for those who had missed out on this opportunity, that is those who missed out the selling opportunity right below the 12,400, we might be looking forward to another retest of structure here to incite another wave of bearish momentum to the downside. So let's keep this in mind for more opportunities to add more position to our current trade here. And another thing I would like us to take note of here, remember that we have the resistance point for this week sitting around the 12,320 level, where we saw the breakout retest of that structure, which incited that bullish momentum we have been enjoying since the beginning of the week. And right now price action appears to be approaching that level now, and in fact we have been witnessing some buy pressure around that area in the last 3 hours here. So there is a possibility that price action might evolve to another wave of bullish momentum from this current structure. So we need to be very careful, as we need to. That's why I said we should move our stop loss accordingly to lock in some profit. So if the buy pressure above the 12,320 level continues here, we want to be looking out for buying opportunity if price action breaks above the 12,400 to the upside, and this might likely be a retracement of that previous impulse leg. As you can see, price action broke down that bullish trend line, and there is a likelihood that price action will come back to do a retest of that structure to incite another wave of bearish momentum. So if the buy pressure here continues, then we want to be at this bus stop here, where we want to be taking advantage of that buy position. So you can have your buy stop order around that area with the hopes that price action will trigger that position, and that will likely give a minimum of 190 pips to a maximum of about 250 pips to catch if price action moves in that direction. So these are my views here on the US tech for today. If you do have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and be rest assured that I will be checking from time to time to see if there are any questions for me. So in the absence of no questions, we shall be moving on to the next pair. And the next pair we shall be looking at today is the USDJPY. And in fact, the USDJPY is one of our most profitable trade for this week, as we have been buying this pair since the beginning of this week. Now, if we run through how the week has started here on the USDJPY, remember we had a buy position open over the weekend on the USDJPY after price action climbed above the 131.00 level. Remember that very important structure we identified on the daily time frame. For the sake of clarity, and for those who are not part of our live session on Monday, let me quickly run through the daily time frame to show you how important the 131.00 level has been and why it had been a major yardstick for trading activity for us prior to the beginning of this bullish momentum that we are currently enjoying. Now, one thing we saw on the daily time frame was that price action has been bullish in the last 2 years, and as a result of that, we identify this bullish range here. As you can see, price action had continued to find higher highs and higher lows. However, things got a little bit interesting during the month of April last year. Let me zoom this out a little bit so that you can see what I'm talking about very well. So during the month of April last year, we saw a situation where price action was initially caught within a channel around the 131.00 level, where the resistance point of the channel remained at the 131.00 and the support level for the channel remained at the 127.00 level. And what we saw here was a breakout of that structure, which incited the bullish momentum that kickstarted in the month of June. And you saw our price broke out, retest of that level to further emphasize the strength of the buyers at this point, hereby giving us an insight into labeling that area as a strong demand zone. Now, following the bearish momentum that started in the month of October last year, that is somewhere around here, we saw price crash to the downside, falling back within that channel that price was at in the month of April, May, and June of last year. So at the beginning of the year, we saw price action drop back into that channel, forming another consolidation around that area to emphasize the indecision in that market at that particular point in time. And remember that we were not able to trade the USDJPY for like 2 weeks as we waited for this consolidation phase here to mature into a significant structure that we can use to identify trading opportunity. And if we look into that structure critically well and taking into consideration this bearish momentum that crashed down into this channel, you will see that the consolidation phase here transitioned into something that looks more like a double bottom structure, which is a strong reversal pattern from a technical standpoint. And you know, from a technical standpoint, whenever we identify such a structure like this, the next thing we want to be doing is to identify a neckline which we shall be using to guide trading activity. And coincidentally, the neckline falls around the 131.00 level, a level which has been a major determinant of buying momentum throughout the second half of last year at least. So we had a neckline here, and what we anticipated at the beginning of last week's trading session was that price should break out, retest the 131.00 level to confirm that reversal pattern to incite another wave of bullish momentum. And as you can see, it is very clear that price action has respected at 131 level. We saw the breakout retest of structure, and since the beginning of this week we have been enjoying this bullish momentum right here as we have price moved about 400 pips approximately on this one, which is quite massive for us. And right now price is approaching a beautiful trend line here, where it is very important for us to see how price action will be reacting to that level to decide what our next line of action will be. So for the current buy position right now, I will be suggesting that we should put our TP target at somewhere right around the 135.200 or the 135.00 level, at least for the meantime, while we wait out and see how price action will be reacting to this trend line to determine if we are going to be adding more position to our existing buy trade, or we might be getting ready to join a decline to the downside, whereby price respecting that bearish trend line one more time. So these are the things we are looking forward to, and this might likely happen in the next week. So for the meantime, let's have our TP target around that area, and let's hope that we see our price action react to that level before the week close to determine what our next line of action will be. So scaling back down into the 1 hour time frame here. So now that we know how important the 131 level is here, so we can see how we have been on this bullish momentum since the beginning of the week. We had positions right here, breakout of the 131.800 level. We had the retest of that structure. We had another position at the breakout of the 132.300 level. Added another position at the 132.900, and during the live session yesterday, we identified the simple setup here where I told you that we still have room to add more buy position to our current trade. And what did we see during the live session yesterday? I told you that we have been noticing buy pressure around the 133.700 level, and if we take into consideration the rejection of the 134.00 area, you will see as soon as price got into the 133.700, we saw something that looks more like a reversal pattern in the form of a double top bottom structure. And you know, whenever we have a double bottom structure, we need a neckline that we shall be using to guide trading activity, and this neckline fell around the 133.950, where a breakout retest of the neckline will be a beautiful opportunity for us to add more position. And this is exactly what happened in the last 24 hours. We saw price action break out of the neckline area, the 133.950. if you had actually missed that one, price action came back to retest the structure, hereby giving us more opportunity to add more position to our existing trade. And we saw buy pressure around this area, which triggered another wave of bullish momentum here. And if you remember yesterday, I told you that if price action continues to find higher highs, breaking out of the 134.00 level, we want to be adding more position to our existing trade. So now we have multiple entries here, I think about 5 to 6 positions running on the USDJPY throughout the course of the week, and all of these positions are very profitable, making the USDJPY our trade for the week. And for those who have been part of this profitable journey, well done to you guys for being on standby. Kudos to you guys. So what you want to be doing right now is to secure all your current positions right now, and the most appropriate place I will be advising you to do that is probably somewhere above the 134.00 level, at least in the meantime. And remember, we have a TP target somewhere between the 135.200 and the 135.00 area. So we are about to hit our TP target here and call it a day for the USDJPY. But if you still intend to trade the USDJPY, remember I showed you a bearish trend line on the daily time frame, where I said we need to monitor how price action will be reacting to that trend line to determine if we are going to be adding more position to our bullish momentum here, or we are going to be getting ready to join a bearish move to the downside from this level. So we are at a critical point around the 135.200 and the 135.00 area. So kindly move your stop loss accordingly, secure this current position, and this might likely be the end of trading the USDJPY for this week. So let's see how this plays out during the New York session today, and I hope that you be on standby to identify these opportunities here. Now, to make things easy on this chart here, and for those who would like to munch my screen, I will be drawing a resistant point between the 135.00 level here, which is a very strong psychological level as well. And I said we shall be using that level to guide trading possibilities, as a breakout retest of that level will be welcoming additional position to our existing trade. And if selling pressure resumes here, we'll definitely be looking out for selling opportunity, which might lead to the breakdown of that bullish trend line that you have on your screen here. So let me label this one. So we have the 135.00 level labeled, so you will be able to have a visual understanding of what I talked about that current structure. So this is what we are looking forward to add more position. A breakout retest of the 135.00 level will welcome additional position. However, if price action breaks down that if we start seeing selling pressure below the 135.00 level, it might lead into a situation that will break down the 134.00 area, which also shares a beautiful confluence with that trend line. And remember that bullish trend line has been supporting bullish momentum since last week. So if we do see a breakdown of that bullish trend line, this will be a beautiful signal that the trend line no longer has the capacity to continue to hold that bullish momentum. And if a breakdown happens followed by selling pressure below the structure, it will be a beautiful opportunity for us to join a decline, and this decline might be very massive. So that is that on the USDJPY. If you have questions, feel free to drop your inquiries in the comment section below. Then I'll be moving on to the next pair, and the next pair we are going to be looking at this morning is the USDCHF. This pair was introduced to us by Steamroller at the beginning of the week. Actually, it's been a while since I've traded the USDCHF, but for the fact that someone in the house introduced it to us, we needed to look at it and look out for trading opportunities that we might be looking forward to for this week. And in fact, the USDJPY has been very profitable for us, though it took quite a long time before this traction began. So at the beginning of the week, we saw the situation here where price action has been bearish on the USDCHF since the beginning of the week, and as a result of that, we connected the series of lower highs here to identify this bearish trend line that you can see on my screen. Now we had an opportunity to sell the USDCHF right as soon as price broke down, retest the 0.9 to 150 level, and we saw the first breakdown of that bullish trend line that we identified at the beginning of the week. Price came back into the structure. We saw buy pressure around this area, and at this point, I think it was on Tuesday's live session, I made mention that we are going to be using the 0.9 to 150 level. This key level here has a yardstick for trading opportunity, and coupled with that level is the bearish trend line here we said we shall be using for buy trading opportunity. And how did we say we are going to be using the structures? Well, what I said is that if price action ever breaks down the 0.9 to 150 level, we want to be looking out for retest of structure here to join a decline to the downside on the USDCHF. But if price action remains above the 0.9 to 150 level, we will be looking out for buying opportunity. And one thing you will notice here since Tuesday is the fact that price had continued to trade above the 0.9 to 150 level. And since Wednesday's trading session, I told you how we want to be using the 0.9 to 400 level as a breakout retest of structure to confirm that buyers are indeed strong in this current market. And though we saw a little consolidation phase between this area as price action continues to trade above the 0.9 to 150, and this resulted in a double bottom structure here yesterday. You might have missed this one. I cited this one during the New York session yesterday. I think we saw this during the live session yesterday where we identified the neckline of that reversal pattern at the 0.9 to 300 level, and I told you that if price action ever breaks out of that level, we want to be joining a bullish momentum from that area. And if this leads to a further breakout retest of the 0.9 to 400 level, we want to be adding more position. And I also identify structures like the 0.9600 level and the 9 to 900 level. If breakouts of the structures happen, we want to be adding more position. And if you look at the current structure we have here, we have multiple entries on this one. The first position was triggered here, that is one. We had a second one here, we had a third one here, and we had the fourth one at this point. So we have 4 positions running on the USDCHF. In fact, it took a long time before this position was matured, but that is why patience is required. So it took about Monday, Tuesday, Wednesday, and Thursday before we started seeing this position running. So currently, for those who have been part of this trade, currently price action has moved over 98 pips in our favor. So at this point in time, for those who had been part of this trade, well done to you guys. Kudos to you for being on standby to catch this trading opportunity. So the next thing we want to be doing here, as usual, is to secure this current position. And one thing we want to be doing right now is to move our stop loss accordingly to protect this position against any sudden pullback that might likely happen at this point. And if we take into consideration this current structure, I will be advising you to move your stop loss to somewhere right above the 0.9300 level, which has a structure here. You can see we had a rejection here. We had a respect of that structure around this area. So above the 0.9300 level seems most appropriate to lock in some profit. And if you want to give price action more room to breathe in anticipation of another wave of bullish momentum, you can place your stop loss at your entry point at the 0.92900 level. Now, for those who had missed out on these opportunities that we have taken advantage of in the last 24 hours, well, will the market be giving us more opportunity to join or add more position to this trade? Well, at this point in time, if we look at the current structure, I will be advising us to stay out of this trade now unless we see a situation where price comes back to do a retest of the 0.92900 level with buy pressure above that level on our lower time frame. Then we could actually join that rally to the upside. But if this does not happen, I will advise that we just stay out of this trade. Our TP target for all the buy position we have here on the USDCHF falls right around the 0.93700 level, which is a very strong key level in this market. Now, for the sake of those who are not part of our live session prior to this one, let's scale up to the daily time frame to see how important the 0.937 level is in order for you to be on the same page with us. Now, if you look at the daily time frame here, you will see how the 0.937 level had been a strong buying niche in the past. In fact, since the month of April till the month of September, we saw how the 0.93700 level has been a strong buying niche. And during the later part of last year, we saw attempt by the buyers to trigger another buy position from there, but this wasn't strong enough as we saw price action break down the structure in the month of December, did the retest of the structure, and in fact, since the month of December, price action had been trading below the 0.93700 level to further emphasize the strength of the sellers in this current market. So as a result of this, we have the key level sitting around that area. So at this point, we want to have our TP target for all the current buy positions we have here around the 0.937 while we wait out and see how price action will be reacting to that structure to decide if we are going to be adding more position to our current bullish perspective here on the USDCHF. And if it so happens that we start seeing rejection of the 0.937 level here, it might be the beginning of another incitation of a bearish momentum, as it has always been around this area in the last couple of months. So at this point, our TP target remains around that area while we wait out and see how price action will be reacting to that structure if it so get to that point. So that is that on the USDCHF. I'm not sure if Steamroller is in the house. I want to know if he was part of this trading opportunity, and if he was, I'm very sure he will be in profit at this point. I have not heard from him, I think, in the last 24 hours, I guess. So with that being said here, if you do have any questions regarding what I just explained so far on the USDCHF, feel free to drop your inquiries in the comment section. 98952, good morning to you. I can see you. Cairo Karim, good morning. Susie NB, good morning to you. 5176 says he doesn't understand. Well, if you have been trading, you should understand what we are talking about here. But if you've not been trading, well, I will advise you to continue to stay tuned to the session. We normally do this 10 a.m. UTC every day in anticipation of the New York session. So what we simply do here is to gather here and plan ourselves against the New York session. And during the course of the session, we share ideas on how to take advantage of trading opportunities, how to manage our running trades, and how to manage potential trading opportunities when they finally get triggered. And every day we come back here the following day to review how well the positions we have been trading is doing and how we mitigate against any further risk on this trade. All this might look a little bit complicated, but with time, when you continue to be with us here during the live session, you would definitely get to understand how things works, and you will be able to use the information here to decide your own personal decision on this instrument we are talking about here on the live session. Okay, so I will be moving on to the last pair for today, and the last pair we are going to be looking at is the XAUUSD. And on the XAUUSD, we also have a profitable position running here. Remember, since the beginning of the week, we have been selling the USDCHF. So let's quickly see how the week has started for us on this pair. So we are on the 1 hour time frame here, and the first thing we observed at the beginning of the week was that price action was in a consolidation phase between the 1865, which was the resistance point for this week. As you can see here, throughout the course of this week, price never broke out of the 1865, and every attempt by the buyers to do so has been negated by the sellers at every point they tried that, and that makes that level a very strong resistance point. Then we had a support level for the channel sitting around the $1,857.50 level, and what we said is that price action should either break out of the resistance point or break down of the support level to give us a trading opportunity. And this is what we saw at the beginning of the week. That was later on during the New York session on Monday. We saw the breakdown of the support level, which gave us an opportunity to join that decline to the downside, and in fact price action moved about 700 pips in our favor before we saw those bullish momentum take us out of the position with some small profit. Now, in addition to that channel is the simple pennant we saw here. Before the channel was formed, we saw this pennant. When we connect the bearish trend line here, the lower highs here, we had the trend line, and when we connect the higher lows here, we had the bullish trend line. And if you look at the breakdown of the support level of that flat channel here, it shares a confluence with the trend line of the support level of that pennant. And after the breakdown of that structure, we saw a situation where price came back to do a retest of that trend line, and what we saw afterwards was quite massive, as we saw huge bearish engulfing candle rejecting the 1860, retesting this level one more time. That was on Wednesday, and we were able to take advantage of that move. And in fact, we had about 3 positions there. We had the first position at the 1860, the second position at the breakdown of the support level for that week, and then we had another position at the breakdown of the 1854. And this is what we had yesterday, as price action moved significantly well in our favor in all of this position. And since then, price has continued to trade to the downside. Now, during the live session yesterday, this is what we saw. We saw that as soon as price got into the area around the 1830 level, we saw this huge consolidation phase. And in fact, I had to readjust the resistance point of the channel to the 1845 level. And if you remember vividly, we identified a sell window here where we said if price action retests that window, we shall be looking out for selling opportunities. And we had couples of retest of that 1845 during the trading session yesterday. We saw the first one during the early hours of yesterday's trading session. Then we saw the second one here during the New York session. We saw the third one here, and it was a good sign to join that decline to the downside. And I also told you yesterday that if price action continued to drop to the downside, breaking down the 1830 level, we want to be adding more position to our existing trade. And this is exactly what happened as price action continued to find lower lows and lower highs. So if you have been part of this trade since yesterday, kudos to you for being on standby, as you would currently be running with about 2000 pips in profit. And if you are taking the sell position at the breakdown of the 1830, you would currently be running with about 700 pips in profit. Now, the next thing we want to be doing here is to secure the current position, as we've continued to see some buy pressure resume around the 1820 level. level. So at this point, I will be suggesting that we move our stop loss to somewhere right around the entry point, which is at the 1830 level, and let's see how price action will be reacting to the structure. And for those who had missed out on both of these opportunities here, let's see if the market will be presenting to us with another chance to join or add more position to our existing trade. Now, what I will be looking forward to here, since we already have a support level here, as you can see in the last 3 hours, price action had been rejecting the $1,820 level. So let us identify that area and then use that area as a yardstick for trading opportunity for today. So for the sake of clarity, we shall be labeling this with 1820, and then one thing I will be looking out for here during the New York session is to see price action break down this level to give us another opportunity to add more position to our existing trade on the XAUUSD. So these are my views here on the XAUUSD for today. So I hope that we be on standby to catch this move when it finally happens. And for those who had been in this trade since yesterday, well, I have told you to move your stop loss to somewhere right around the 1830 to secure the current position as we continue to monitor price action. Another thing about this current structure is if price action comes back into the 1830 level area and we start seeing multiple rejection of that level, it will be a beautiful opportunity to join at the breakdown retest of any reversal pattern identified on the lower time frame around that area. Then a further breakdown of the 1820 will welcome additional position. So I hope that we be on standby to catch any of these opportunities during the New York session today. And I hope you munch my screen so that you can use it as a reference point when you're about to make your individual decision on all of these instruments we talked about today. So at this point, I will want to call it a day, but before I do, let's do a quick recap of what we talked about today, especially for those who are not part of the beginning of this live session. So the first commodity we talked about today is the US oil. Hold on a second, please. So on the US oil, we've been in a sell position since yesterday, right below the $78 level, and I told you to move your stop loss accordingly to secure this current position. And for those who had missed out on this opportunity, I have told you that we should be looking forward to see how price action will be reacting to the $76.60 level to decide what our next line of action will be. You might want to have your TP target around that area, but if you move your stop loss accordingly, it's okay. So what I'm simply saying around this area is if price action breaks down the $76.60 level with selling pressure below that structure, it will be welcoming additional position to our existing trade. And remember, we identified the structure on the 1 hour time frame, on the daily time frame, and we said we noticed how that level had been a strong demand niche in the past. So there is a likelihood that we might be seeing buy pressure resume above the structure on our lower time frame. And if this happens, if price action goes back into the $78 level, we might likely see a situation where selling pressure will resume again to incite another wave of bearish momentum. Remember, the $78 level was broken for the first time this week, and there is a likelihood that price might come back, do a retest of that structure to incite another wave to the downside. But if that does not happen, but instead price action breaks down the $76.60 level, it will be a beautiful opportunity for us to join or add more position to our existing trade. So I wish you best of luck on the US oil for today. Then we went on to talk about the US tech, and on the US tech as well, we have been profitable for this week so far. And yesterday we had a sell position triggered, had the breakdown retest of the 12,600 level, and since yesterday we have been running with over 270 pips in profit on this one. Then we also had another position at the breakdown of the 12,000 12,400, as you can see here. And one thing I said is that we should be moving our stop loss to somewhere right around the entry zone here while we wait out and see how price action will be reacting to the 12,320 level to decide what our next line of action will be. And I said if a breakdown of the structure happens, we will be looking out for more opportunities to add more position to our existing trade. However, if buy pressure resumes around this area, remember this is the resistance point for the week. This is where the week started for us. This is where we took advantage of the first buy position we had this week, and price action is right back at the 12,320 level where we have been seeing some level of buy pressure around that area. So if the buy pressure here continues, we might likely see a situation where price will climb up, break out of the 12,400 level, which will welcome a bullish momentum on the US tech for today. So for those who are still in this trade, ensure that you have moved your stop loss accordingly to secure this current position while we monitor price action around the 12,230 level. Then we went on to talk about the USDJPY for today, and in fact the USDJPY is going to be considered the trade for the week for us here as we continue to join that bullish momentum to the upside. And I told you how we have about 6 positions running here. We have the first one here, second position, we also had the third position here. We also joined above this level, that's the fourth position, fifth one, and then we had the sixth one around this area. And I told you that we have our TP target around the 135.00 level and the 135.200 area, which is a critical point which we identified on the daily time frame. So at this point, I told those who are being part of this trading journey to move their stop loss to somewhere right above the 134.00 level while we wait out to see price action hit our TP target on the USDJPY. And for more trading opportunities on the USDJPY, and for those who had missed out on these opportunities that we have been enjoying, I have said that you want to remain patient here as there is a likelihood that selling pressure might resume below the 135.00 level in such a way that it brings price back into that bullish trend line, which also shares a confluence with the 134.00 level, and it might likely incite another wave of bullish momentum from that area if we sight buying pressure on our lower time frame. So you want to join the bullish momentum if price action gets into that structure. Now, I said something about the structure here, that if it so happens that we sight a breakdown of the 134.00 level, that is a breakdown of that bullish trend line, then this will be a good signal that the bullish trend line may no longer have the capacity to hold bullish momentum anymore. And if this results into sudden pressure below the structure, then we will have no choice but to trigger a sell position at that point. Now, another thing about this current structure is the fact that if this bullish momentum we have here continue to climb higher highs in such a way that it breaks out of the 135.00 level, then it will be a beautiful opportunity for us to add more position to our existing trade. So that is my view here on the USDJPY. I hope you munch my screen so that you can use it as a reference point when you're about to make your own decision. Then we went on to talk about the USDCHF, which was a pair which was introduced by Steamroller at the beginning of the week, and in fact it took a long time, I think 72 to 96 hours before we saw this bullish momentum that we are. So remember, at the beginning of the week we have been anticipating using the 0.9 to 150 level as a yardstick for trading activity, where we said if price action continue to remain above the 0.9 to 150 level, we shall be comfortable with our bullish buyers. And as you can see what happened here, price action remained above the 0.9 to 150, and we used the 0.9 to 400 as a breakout retest of structure for us to join this rally to the upside. And in fact we have two we have 3 and we have 4 positions running on the USDCHF. And kudos to everyone who has been part of this trade. I told you to move your stop loss right below the 0.9300 level while we continue to monitor price action. And I told you that our TP target remains around the 0.937 level, where we said we want to see how price action will be reacting to that level to decide if we are going to be adding more position to our bullish buyers or probably getting ready to join a decline if we start seeing multiple rejection of that structure. So I wish you best of luck on the USDCHF for today too as well. Then we went on to close the day with the XAUUSD, and I told you that with the XAUUSD we have been selling the XAUUSD since the beginning of this week. And what we saw here at the beginning of the week was that the 1865 level had been a strong resistance, as it has been resisting all attempt by the buyers to break out of that structure. And coupled with that, we have this bearish trend line to further emphasize the strength of the sellers at this point. And in fact, we had positions like this: 1, 2, 3, 4 positions running before we added another position at the retest of the 1845 level, which falls around the sell window we identified during the live session yesterday. We had a position there too as well, and we were told to sell at the breakdown of the 1830, which also triggered another sell stop order at that point. And one thing I told everyone who has been a part of this trade is that we want to be securing the current position by moving our stop loss accordingly to somewhere right around the 1830 to secure this current position, as we wait out and see how price action will be reacting to 1820, where I said a breakdown of the structure will be welcoming additional position to our existing trade here. But if the buy pressure here continues in such a way that it takes us out of the current sell position here, it's okay, we will still be in profit in this position, as we I've already been selling this pair right below the 1860 at the beginning of this week. So these are my views here on the XAUUSD. Kindly munch my screen so that you can use it as a reference point when you're about to make your individual decision during the New York session today. And it's on this note I would like to call it a day here. And in fact, it has been a wonderful week for us on the Extreme Speed community here, as we've been very profitable in all of the pairs we have been monitoring since the beginning of this week. So once again, congratulations to everyone who has been part of this profitable journey, and thank you for your attention, as I really appreciate it. And on this note, I want to wish you best of luck during the New York session today, and ensure that you have secured all your positions by moving your stop loss accordingly to the designated levels that we identified during the live session today. Thank you once again for being around. I wish you best of luck during the New York session, and I wish you merry and happy weekend as usual. So I look forward to seeing you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review and get prepared for the new week. Do have a wonderful evening. Bye bye. You're welcome, Haki88.